After weeks of bear hammering, bulls were back in action on the last read. Hopes of de-escalation of the Ukrainian war, bargain hunting, and the BJP's win in assembly elections lifted spirits. This week, Indian stock market will kick off the holiday truncated week with retail inflation and wholesale price inflation numbers to be released on March 14. On the global front, OPEC will be releasing its monthly report on March 15. Oil prices have eased off from their 14-year highs and are hovering around $100 a barrel mark. However, investors are expected to remain cautious whether Brent crude will slip below triple digits amid sanctions imposed on Russia's energy exports. Meanwhile, the US will roll out producer price index data and Eurozone will release industrial production data on March 15. Later, on March 16, the US Federal Reserve will commence its two-day meet on March 15 and release outcome on March 16. Investors expect the US Fed to increase interest rates by at least 25 basis points to tide rising inflation. Goldman Sachs expects 7 rate hikes this year as hotter than expected inflation data is expected to force Fed's hand to hit the nail on the head. On the other hand, JP Morgan forecasts 9 strings of rate hikes until March 2023. By end of the week, Eurozone Consumer Price Index data is expected. Bank of England will also set the interest rates on March 17 after UK inflation overshot to a 30-year high. Let's listen to Vinod Nair to know what this means for the markets back home.
Next week, the market will focus over the reduction of commodity prices and diplomatic developments between Russia and Ukraine. There are better hopes and commodity prices have started to revert. If the trend continues and it improves further, the performance of Indian market will be good, else it may get a bit choppy. Otherwise, the market will also focus on inflation data to be released in India and US next week. And US Fed and Bank of England meeting, which is also scheduled next week. This will provide some volatility in between for next week. However, inflation data may not be very important in the short term as they are expected to normalize in the long term as the commodity prices and supply constraint in the world reduces in the future. World central banks are expected to increase their rates by 25 bips next week, and but it should not have a negative effect on the market because it is largely expected. The market has corrected well, like in domestic market has corrected by 8% from the start of the war and about 15% from the 52-week high. Smart money has started to chip into the market and they are looking for opportunities on a stock-to-stock basis on a short to medium term basis.
Among individual stocks, A.K. Prabhakar of IDBI Capital suggests to watch out these counters. Listen in.
Chemical prices have gone up in the last 2 weeks. Mainly, chemicals, where we import from Russia or from China. These chemicals have gone up. I think chemical companies are something to watch out for. Gujarat Alkali, GNFC, even NFL. Russia has banned all fertilizer chemicals. That is likely to impact India in a big way. But there are few companies which benefit from that. In that, GNFC and Gujarat Alkali Chemical, or few companies, Deepak Fertilizer also is one more, Chambal. These are beneficiary of that. So I like chemical companies at current level, and there is a crisis, and these companies can benefit from that crisis.
Against this backdrop, the tech charts suggest a small pullback rally with a support of 16,350 to the 50 packed index. Volatility is expected to continue as Sensex signals a downturn to 53,000 levels with a support of 54,000.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.